Good morning. Welcome to Stock Market Today. It's Friday, November 13th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So Friday the 13th, let's dive into it. U.S. equities were lower in Thursday's trading, ending just off the worst levels of the day. All sectors closed in the red, with energy, materials, and financials lagging. Consumer staples, healthcare, and comm services were your outperformers. Treasuries rallied with the curve flattening, and the dollar was weaker against the yen and the euro, but stronger against sterling. Gold finished up 60 basis points. WTI crude settled down 80 basis points on the day. So rising COVID cases and the broadening of restrictions weighed on investor sentiment yesterday, despite Monday's vaccine news. As we get to the desk this morning, bit of a reversal. S&P futures are up about 90 basis points to kick us off on the final day of the week, and that's after Asian markets were mostly lower overnight, with China lagging. European markets are mostly higher. Treasuries are unchanged to slightly weaker. The dollar is weaker on the major crosses. Gold is up 30 basis points. WTI crude is down a little less than 1%. And as we dive into the structure of the major market ETFs, the range remains the same, I guess is the best way to describe it. SPY tried to break out, pull back, now holding right around the top end of that breakout level. Support at 340, then 320. Resistance is at the breakout level. Let's call it 358, 360. Kind of splitting hairs here. We're trading at the breakout level. The knock that I have here in the near term is that based on our work, our overbought, oversold indicators are all at or near overbought levels for these three ETFs. So wouldn't be surprised to see some choppy trading continue in the near term, but the structure of the trends does remain in place. Consolidation within the context of an uptrend. For the Qs, 260 remains that key support level. A move through 280 increases the odds of September highs. We're above 280, so we still have to play for the highs, right? That doesn't mean we're going there today, but especially with the overbought conditions. Now, IWM support near 160, and now it's fighting at the 52-week highs. Those 52-week highs are from back in the beginning of the year, the January-February timeframe. Slight breakout earlier this week, and now consolidating. So I guess I would call the markets consolidating near the top end of their ranges, but overbought here in the near term. So we kind of look at that and we say, okay, the structure of the trends are in place. We've been bullish. We remain bullish. We became more bullish on tests of the 320 level for SPY up here near the highs. You probably just want to temper your aggression levels for the time being. You want to wait for either an oversold condition, or I'm partial to breakouts. If we do get a confirmed close above, at new highs, I think it makes sense to have an idea of what looks interesting to you. And it's an opportunity to maybe add some exposure. No one says you have to add your full exposure all the time. You can always start a position and then add to it as the trend works in your favor. I know that is a way that I kind of look at the world these days, especially when some of the bigger breakouts have subsequently faded. So that's how we're framing up the major markets as we head into morning trading on Friday the 13th. Let's look at our market in a minute now. What are we writing about today in the note? Well, it's Friday, so we go over our key themes and relationships that help drive a lot of our views. But first, obviously COVID cases continue to rise, and that's tempering early week vaccine optimism. The copper to gold ratio does paint a better economic picture, and that's playing out as growth versus value searches for direction in a choppy consolidation. Small caps break resistance on a relative basis, building on race and strength. And as we said, futures point to a higher open here today. Now, after yesterday's action, let's take a look at the structure of the power bar ratios for the major indices. The Dow lost 1%. Ratio, however, 4-to-1 bulls to bears. S&P 500 also down about 1%, 136 to 59 bulls to bears there. NASDAQ 18 to 12 bulls to bears after being it was an outperformer yesterday, only down 47 basis points. Small caps lagged 791 to 229 bulls to bears on that front. Bonds rallied, sending yields lower. However, if you look at the long bond, TLT did make another lower low this week. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board are mixed. It's our stock of the day now. And the stock of the day is kind of interesting to me because it's flashing a personality change. This has been a big winner through the COVID economy. DocuSign recently saw its rating go bearish, on a very bearish rating now, and the trend has turned weak as the stock has moved below our long-term trend line. Money flow is bearish, overbought, oversold indicator, middle of the range. But what jumps out at me is the potential for a personality change here. We went from being a solid outperformer with an acceleration through COVID to now going into some choppy trading here in the near term. The way I'm kind of framing it is if you've had a big winner here, it might make sense to take some off the table. I think you want to watch Tuesday's lows. A break of Tuesday's low would likely confirm that the trend is now to the downside. So, you know, when I look at something like this, it's been a big winner, and you start to see some of the rotation playing out in the market, and you think about what could potentially be a source of funds that could be steered towards other potential opportunities. Stocks that look like DocuSign jump out at me. Obviously, if restrictions or another lockdown would negate that view, but here, based on the weight of the evidence that I have now, that I see in front of me, I'd be more inclined to be using DocuSign as a source of funds to potentially shift towards some of the other areas of the market that are beginning to show signs of relative strength and outperformance. So that's kind of how I'm framing it up here. I'm highlighting it in my note, wanted to highlight it here on the show as well. We're looking at a potential personality change in one of the COVID leaders, DocuSign, ticker DOCU. Let's take a look at our sector tracker now. Movement over the last 5 days. Energy and fins remain at the top of the list, along with industrials. Staples had a decent day yesterday, bumps them up to the number 4 spot. Middle of the road, REITs, utilities, and healthcare. Towards the bottom of the list, materials, tech, comms, discretionary. So that rotation still playing out. Groping for direction thematically under the surface of the market remains, the key story this week from a market's perspective. Long time leadership on the part of growth is becoming a harder trade to make. Now, we've been saying that all week. We've been saying that for a couple of weeks. It's not to say that, you flip the switch and go all in on cyclical values or cyclical and value. It's to say that taking a broader, more balanced approach may be the best course of action here now. Now, we've highlighted the materials, we've highlighted industrials. Lately, we've been highlighting the financials. Those groups, if you look at 6-month performance, those groups have now joined tech, comms, and discretionary as outperforming the S&P 500. So that's a shift that's played out over the past few weeks and months, and I think it's something that we want to pay attention to. Taking a look at our industry in focus now. Yesterday, we looked at services. Today, we'll look at oil and gas, EMP, and this has just been a disaster over the past 6 months, lagging the S&P by close to 30%. Power bar ratio, which looks at future potential, is still weak, 12 bears for 4 bulls, and it's currently ranked number 19 of 21 subsectors that we look at. Some of the indicative names there: Hess, HES, with a very bearish rating; Occidental Petroleum, OXY, with a very bearish rating, although there is an activist investor involved there; and Cabot Oil and Gas, COG, with a very bearish rating as well. So while we are watching the shifts under the surface, they haven't quite gotten to the energy sector yet. Now, the energy has had a nice pop this week, but based on the Chaikin lens and the way we look at the world, they're not there yet. Contrast that with something like the banks that have seen, KBE, KRE, which have seen their ratings turn bullish. So if we take a look at XOP, you can see the story. Still a downtrend, underperforming, bearish money flow, and now it's overbought. So signs of a base, I guess, is what we could call it, but not quite there yet as we look at XOP, the EMP ETF. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. And it kind of interesting because the leader side of the board, nothing really with company specific news that's jumping out at me. Biorad up 2.9% on the day. CLX has actually come under quite a bit of pressure of late. has a very bearish rating, but got a little bit of a pop yesterday. That's probably due to the COVID cases and some of the restrictions or the broadening of restrictions that appear to be coming back into place. That stock up 2.4%. Progressive up a little over 2%. Bullish rating here, nothing company specific. EFX. My understanding is that they received a mention in a note out of RBC recently. I have not seen the note, but that's the only thing that I really saw when I checked out the news on EFX. And Mettler Toledo MTD up 2%. Again, nothing company specific driving trading there. Loser side of the board, Carnival Cruise Line down nearly 8%. Rising COVID case counts probably playing out there. PSX shareholder report about some petrochemical risks in and around the Gulf. It was just a headline that I saw, did not read the report, but it does appear to be what the news outlets are pointing to as weakness in PSX yesterday. On top of that, you did have some energy weakness. MPC Deal Reporter article sent that stock lower on the day. Also some energy weakness there. Fox A is kind of interesting. Some media reports, I don't think that they're confirmed, that President Trump was potentially looking at starting a media company that would compete with Fox. Obviously unconfirmed. It's just what I read as I was checking the news on the Fox A weakness on the day yesterday. That stock down 6.6%. And SL Green, likely levered to the COVID cases and the rising case count as SL Green is in office REIT. Let's dive into the charts now. If you're wondering why there's rotation, this is it. This is why there is rotation. Copper to gold ratio, longtime watchers of this show know the importance that I place on it, right? I'm not an economist. This is the chart that drives my views on the economy. And is it perfect? No. Is it generally directionally right? Yes. What you can see is after a steady downtrend that began in 2018, right? So the economy's been slowing. Global economy has been slowing for 2 years. It wasn't just COVID. This trend was firmly in place well before COVID helped accelerate the decline. But since April, it's rallied, retaken the 200-day moving average, and now broken through a resistance zone. So when copper is outperforming gold, i.e. that line is moving to the upside, to me, that means investors are pricing in a better economic growth environment. And if the prospects for economic growth are better, i.e. growth is less scarce, the growth names come under pressure, right? When growth was scarce, when the economy looked like it was slowing and was in fact slowing, growth outperforms. Growth is scarce. Investors pay a premium for what's actually growing. So they gravitate towards the growth areas of the equity market. Now, with the break of the 200-day moving average and a continuation higher, we've seen the growth value ratio move into this choppy consolidation and try to find its way. So to the extent that copper continues to outperform gold, we think that you are likely to continue to see rotation under the surface of the market. Does that mean that the growth stocks are going to go down? No, it doesn't mean that. Does it mean that they are the layup outperformer that they have been? Probably not. Let's take a look now a little bit further from a risk perspective. Encouraging signs under the surface of the market if you're willing to drill down. Take a look at the equal weight consumer discretionary versus consumer staples ETFs, right? And that line is steadily marched higher. It's broken through the 200-day moving average. It's broken through near-term resistance. And the reason we look at this on an equally weighted basis is because Amazon is 25% or so of the discretionary sector. So you have discretionary outperforming staples, right? So risk on outperforming risk off. And you can't attribute it to one stock, right? You can, on an equally weighted basis, everybody's pulling the same weight, and you have this outperformance on the part of discretionary relative to staples. So to me, that speaks to a risk-on type environment, and the RSI of this ratio is in bullish ranges, confirming the strength of the uptrend here in the near term. And then finally, from a markets perspective, semis continue a steady relative uptrend against the S&P 500, confirmed by momentum with the RSI holding bullish ranges. I mean, if I wanted to kind of get picky, I can say it's somewhat extended, but this trend remains in place. And to the extent that it remains in place, that's generally a bullish dynamic for the equity market. So we'll continue to watch this very closely. That's going to wrap us up. I hope that everybody has a great weekend. Take us for a test drive, chaikinanalytics.com/test drive. Be well, be safe. We'll be back Monday.